If you are struggling with top-down analysis, then this video is for you. And if you're not following this channel, kindly follow for more. And if you know someone that is struggling with top-down analysis, share this video to the person. So this is how I carry out my top-down analysis. I start with the what? With the monthly, then weekly, daily, and then 4 hours time frame. Then most of my entry, I do that on 1 hour time frame. So for you to start on the monthly, you need to look at what happened in the price previously on the monthly and what is currently happening and where price will be heading to. So on the monthly, this is what have happened previously. We can see that price is finding support here, which means price has rebalanced this fair value gap. So currently, price is at institutional reference point, which is a fair value gap. Again, you see, this is a fair value gap and price is finding support at that level. So where price will be heading to? Price will be heading to this level. It's as simple. Why? Because we have a breaker block here and price is finding support at this level, which is the fair value gap. Price will what? Will retrace to this level first. And if this level is broken, this level will be attacked and then this high. So another way to look at it is that identify the daily range. You can see here we have this daily range from this high. From this high is a daily range to this level is also another daily range. Why? It's because we have a sweep of liquidity here and a sweep of liquidity here. So sell side liquidity has been taken, buy side liquidity has been taken. So we have a daily range. So after knowing that price is finding support at this level and you're looking at this level for price to reach. So from this level to this level, you're looking at price from this level to come to this level. It's trying to tell you that you need to see something on the weekly time frame. So go to the weekly time frame and look at what is happening on the weekly time frame. So weekly time frame will give you more clarity. So when I said that price on the monthly is finding support at this level, we saw that there was a what? There was a break of market structure, bearish. So here, this was a swing low that necessitated this price to move to this level and price has closed below it. So we have a break of market structure, bearish. But there is what we call return to breaker block. This is a concept by ICT. And then for price to return to the breaker block, we need to see price finding support at a level before moving to another level, which is the breaker block. So price is finding support at this level for price to return to the breaker block, for price to rebalance. So how do you know that this breaker block will draw price to? Is because there's an imbalance, which is the area of liquidity, because price was heavily moving down without any sign of bullish price. So price has created an imbalance in the market. So price must rebalance it. When price rebalance it, we are expecting that price is likely to hold at this level. But if price should break this level, this will be another level for price to reach, and then this level. But here has been tapped. Then we'll look at this swing high. But right now, we need to follow the trend. Following the trend, which means that if price is finding support at this level, at this fair value gap, on the weekly, we can see we have a fair value gap, and price is tapping into the fair value gap. Let me zoom in so that you can see price is tapping into the fair value gap. So that means that price is likely to retrace back to rebalance this level. How do you know that this is a strong fair value gap? This fair value gap was tapped. It's not fresh. Fair value gap was tapped, and then price came back to it, which means this serves as the external liquidity, and price, this serves as an internal liquidity of this range from this low to this high, and price has what? Sweep the liquidity, because liquidity is a magnet, and price will move to area of liquidity to tap those liquidity. So after seeing all these things, you go to the daily. On the daily, will be more clearer. On the daily, here we have this zone and then a fair value gap. This is an imbalance. This is an imbalance, and this is the what? This is the demand zone. If you mark this candlestick, this is your zone. Why is this zone? Because this is the candlestick that what? That resulted price to move bullish. Sorry, this is a zone that resulted price to what? To create this imbalance. And then this is a stronger zone because of this low. There is a pool of liquidity here residing. Price came into it, sweep the liquidity, and then what is finding support at this zone. Another way to mark your zone is that look at the zone and then identify the closing price of the zone. Here is the closing price of the zone, and price tap into it. And this week we have a sweep of liquidity, and price is what? Moving bullishly. How? Because we can see we have a what? Change in the state of delivery. This bearish candle is the change in state of delivery, and price is likely to close above today being the Friday. That is 21st of March 2025. So if price should close above this candle, we're expecting price to move bullishly. So you see, we're expecting price to move bullishly to this level we marked on the what? On the weekly. And if price should break this level, which is a support level, we're expecting price to find support at this level here. Because we have another what? Another zone here. Why is it a zone? We have here. So that is what we call inducement liquidity. If you look at it here, there is no price swing high here to serve as an internal liquidity in form of swing high. But here we have all price displacing. So price must create what? Must create the inducement liquidity to trap traders. And if that is not done, this high will be attacked when this breaker block is broken. So for us to buy, we want to see something like this. We want to see this pattern being created, which will serve as a breaker block. And if you want to sell, we want to see this pattern created for our sell on the daily or on the 4 hours time frame. So do you see? We want to see this pattern created. If this is not created, we want to see this pattern created, failure swing, or this one created, failure swing. Do you see it? For us to what? To buy. So, guys, let's go to the 4 hours time frame. On the 4 hours time frame, we can see here we have a break of market structure, and what I want to see on the 4 hours time frame is that we have a daily range already. A high has been taken and a low has been taken. We have this daily range. So today I will not be buying this pair. Reason is because we see this displacement and price return into the daily range without coming to the discount level. So price can see this as a what? As an inducement liquidity. So today is Friday. I'm not expecting much, but Monday, this might, come into flourishing. So guys, follow this channel, share for more, and also share to the people that are struggling with top-down analysis. See you in the next video.